morning, it's Brian Egger from BreakingCall.com on December 3rd. Isle of Capri, ISLE, is down about 3% this morning after the company reported an October earnings shortfall. Isle reported a 17-cent loss, about 12 cents below consensus, on a 2% revenue shortfall versus street expectations. While the reported revenue result missed expectations, there was some good news and some bad news in this quarter, although on balance, today's moderate sell-off seems justified. On the plus side, Isle's same-store revenues declined only 1% during a 3-month period in which industry-wide same-store regional gaming revenues were down about 6%. On the negative side, the company's newest casinos in Cape Girardeau, Missouri, and at the Nemacolin Resort in Pennsylvania have been disappointing performers to date in terms of both revenues and in terms of cash flow. While we don't expect today's earnings results to precipitate any further short-term sell-off in the stock, we maintain a generally cautious stance on regional gaming operators in view of competitive industry conditions and continuing evidence of same-store revenue declines. I'll now turn it over to my colleague Mike Andrade, who will discuss the technicals for Isle of Capri.
Thanks, Brian. Now let's look at the technicals in Isle of Capri. The stock traded off 2 to 3%, as Brian mentioned, on the fundamental disappointment. However, this is quite modest and appears to be corrective activity, setting up another test of trend support in what we would categorize as an intermediate uptrend technically. This is consistent with our view stated in a June update that the, quote, the intermediate term trend remains up, and current trading pattern suggests that a support retest is likely to resolve in a continuation of the uptrend, end quote. We think that is the most likely scenario at this time as well. Let's look at the weekly chart of Isle. Despite some volatility and lateral range trading, the stock has managed to make higher lows since the major December 2011 low near 390. The stock has been choppy but remains above the June lows despite lateral range-bound trading. Dropping down to the daily time frame, we can see the stock generally holding the 38% retracement level, with the majority of trading remaining above the 200-day moving average as well, which is now at about 746. Trendline support intersects the 38% retracement near 7 1/4 and closes above that level, preserve the current uptrend. A violation of that support, meaning 7 1/4, would set up a decline to the 50% retracement near 677. That appears less likely at this time. The first resistance is the recent high near 8 1/4, and then the top of the trading range at 879, last tested in May. Thanks for watching, and visit us often at BreakingCall.com.